We do have another slot at the end of the session that we're hoping to use, so please do make use of the Q&A facility. So I think that means we can move on to the next slide, and I can hand over to Sophie.
Okay, thank you. Next slide. So we will be turning to clauses which have certainly not been tested yet in court, which are kind of emerging clauses of the recent years, the cyber clauses. In fact, until quite recently, until 2018, there was no cyber clauses in aviation policies, no cyber exclusion or other type of clauses. In fact, it was a problem which had been identified on the market, which was that absent a clause, there was the possibly of silent cover being included in aviation policies. And that was the main concern in 2016, 2017, when the market really started getting interested or fearful about these cyber exposures. In fact, there was one clause which was already present, but very, very specific, and I will comment on it at the very end of this part, which was the AVN2000 and AVN2000A now, which is the date recognition exclusion clause, and with several write-backs. But that was very specific to the problem of change of dates, and we will come back to that later on. Since 2018, a lot of work has been done on the market by various institutions, AICG, LIBA, LMA, IUA, as part of AICG. And we are now fully equipped, I should think, with two sets of clauses which address two different issues, two different exposures. The first set of clauses, which are the data event clauses, address the pure financial loss exposure we might otherwise have been facing as aviation insurers on issues such as business interruption linked to failure of IT system at airlines, airports, and the rest, data breaches claims, sort of claims which started to appear around 2015, 2016. We had a few examples of claims on the market on the aviation policies for instance, bodily injury, mental injury caused by flight delays due to an interruption of service linked to a bug in an IT system of an airline or an airport. These were not major claims, but it was a signal that we, through silent coverage, we could be exposed to that type of exposure, which really have nothing to do with our core aviation coverage, and which are and can be and are indeed covered under dedicated cyber policies, which are delivered by the cyber insurance market. So the first set of clauses, the data event clauses, deal with these exposures which can be covered elsewhere and which are linked to aviation somehow, but which are not part of our core risk, which are really to cover aviation safety issues and aircraft accidents. The second set of clauses is different. Once these kind of peripheral issues were dealt with the data event clause, there was the fear developing, and especially after 2017, when there was the major cyber attack related to Ukraine already at the time, which was the NotPetya cyber attack, which created huge disruptions in all sorts of activities, not specifically in aviation, but which was a signal really to the potential for large accumulation of risk linked in particular to cyber attacks. And from that time on, the authorities and the market started to be concerned about the potential of an accumulation of exposure linked to, in particular, to a cyber attack. And that's why the software clauses were worked upon, and we will go into more details on each set of clauses. So just have in mind that you've got two sets of clauses and they address different issues. Next slide, please. The data event clauses, so the ones who addressing the financial loss claims, the business interruption type of claims, are centered on a data event definition. In fact, you've got two sets of clauses available. The one that was worked by AICG, which is AVN124, and the other one, which has been produced by the Brokers Association, the LIBA. They tend to address mostly the same type of exposure, and they are based on a very similar definition. The only real difference between the two sets of clauses is that LIBA is really focused on electronic data, whereas the data event clause of AICG is broader. It also addresses, for instance, data breaches, which would be linked to data which is not electronic data, which could be even stored on paper. So that's really the only difference. And as you can see on the screen, I won't go through the definition in great detail, but they are very broad. And in particular, the definition of data is quite different in both clauses, but is extremely broad in both instances. Next slide, please. What are the main differences? The main difference is in the scope, really, of the two clauses. The AVN124 clause, the AICG clause, is a very broad exclusion, which applies to all types of aviation covers. It's not only a liability clause; it's also it would also apply to hull and spares and first-party coverage. Whereas the LIBA clause only relates to liability covers, both sets of clauses addressing war risk as well as ordinary risk. The AVN124 exclusion is extremely broad. You can see on the screen that it excludes any loss, damage, expense, or liability arising out of a data event, which, as we've seen before, is very broadly defined and try to capture all sorts of cyber incidents that could occur, whether intentional or just pure IT failures or bugs. So the concept on AVN124 is really a very broad exclusion. Basically, everything cyber is excluded, and several affirmative write-backs, which I have not reproduced here, but you can see the clause in the package. Write-backs basically for all the core aviation covers, risk, liability, aircraft liability, etc. They are all written back. So basically, the intent behind AVN124 is certainly not to exclude coverage by the aviation insurers for aviation accidents or incidents which would be linked somehow to cyber. It's not the intent. It's just the intent, as I mentioned earlier on, to exclude claims which have nothing to do really with our core business and which could be covered elsewhere. That is the pure financial loss claims and everything that is non-aviation claims. For instance, there's no write back in AVN124 for the excess non-aviation. It would only write back the core aviation risk. On the LIBA side, it certainly is more restricted. It only applies to liability, and the only exclusion introduced by the LIBA clause is an exclusion for mental injury claims. It's only the mental injury claims that are being excluded, not, for instance, other claims such as business interruption. So if by any chance there is some kind of business interruption coverage as a kind of extension of coverage somewhere in the policy, this would not be excluded under the LIBA clause because it's only centered on mental injury claims caused by flight delays, cancellation, for instance, of service, non-provision of air transport services. The LIBA clause also excludes everything that is linked to data breaches, so that's very similar from that point of view to the result of AVN124. And there is also an exclusion of property damage to electronic data, which has always been very unclear to me as to the exact meaning and scope of this part of the exclusion. But in any case, really the core difference is that the exclusion is limited mostly, as far as we are concerned, to mental injury claims and data breaches. The exclusion is limited, but the write-backs are also limited. The write-backs are for mental injury, which is resulting from corporeal injury, or from bodily injury per se, and also, again, a familiar wording, aircraft accidents which result or recorded in-flight emergency causing abnormal aircraft operation, which we have seen before in other market clauses. So that's really the main difference. The LIBA exclusion is more limited and might, in case of a broad wording, potentially hiding some sort of silent covers, might leave room to claims which could still be covered for pure financial losses or in excess, for instance, of non-aviation policies. Next slide, please. Now turning to the other bunch of clauses, which are the software clauses, and they address the risk of accumulation, which has been, as I mentioned, a serious concern for the aviation sector, and in particular since the NotPetya claim, the NotPetya cyber attack. It's not just one clause or two clauses, it's a whole set of clauses. It's really a complete toolkit which underwriters can choose within this toolkit the clause that they might want, depending on their risk appetite. Currently, the risk appetite seems to be quite large, because most policies really have a complete affirmation clause. But basically, the clauses range from total exclusion to total coverage, affirmation of coverage. So the result of these software clauses is that you don't have the issue anymore of silent coverage within aviation policies, because in most instances in the slips these days, you find a software clause, and quite often you find a LIBA clause, and less often maybe an AVN124 clause. So we at least the market with these two sets of clauses has resolved the question of silent coverage, which could be hidden somewhere. Now the coverage is not silent, it's affirmed somehow or excluded. What is of interest also in these clauses, which you don't see much these days in the slips, but which could be handy in the future, you never know, are the intermediary clause, which are between total affirmation and total exclusion. You have quite simply a clause which simply introduces a sublimit and an aggregate. And you have also clauses which are quite complex in their writing, and which I will try, if there's enough time, to explain to you as to their functioning, but which are meant to ensure that aircraft operators if these clauses are used, which restrict coverage without totally excluding it, are not exposed to a breach of the minimum insurance requirements that are imposed upon them by various legislations, in particular the EU regulation, but also the United States regulation, and I believe there are regulations in Japan, Brazil, in many countries. Just before turning to the clauses, these software clauses, they address both first-party and third-party risk, so both liability and hull and spares and the rest. And they also address malicious or non-malicious type of risk. So it's not only the cyber attacks that are dealt with by the clauses, but you have the possibility also to address concerns that might be linked to non-intentional cyber events, such as IT failure. Next slide, please. The software definition, as you will see later on, we have two sets of software clauses. One is the LMA set of clause, and the other one is the AICG. In fact, they are very, very similar. I won't go into not in great detail into the history and the reason why we have these two sets of clauses, but basically the LMA set of clause had to be published quickly because of the requirements at the Lloyd's for clauses to be published. I think it must have been before the end of 2020 because time is flying. So I think it must have been 2020. And the AICG, more generally, having a bit more time, worked a bit further on some of the clauses, but the clauses are very, very similar to one to the other. For instance, you can see on the screen that the only differences are the ones which I have underlined in the definition of software. So in the AICG AVN clause, software is defined as a program, source codes, binary codes. Binary codes are not specifically mentioned in LMA clauses, which doesn't mean that they are not also meant to be included. Scripts, applications, and electronic data. It's electronic data in the AICG clause, but it's other operating information in the LMA clause. You see, it's used to instruct computers to perform one or more tasks. So very minor difference in the drafting. And basically, on the basis of the software definition, next slide, please. You've got all these clauses being built around that. Basically, the exclusion is the exclusion. Sorry, I'm trying to find the wording because there's a slide missing, but it doesn't matter. Which is the exclusion, in fact, exclude the use or inability to use software. The affirmation clause affirms the coverage for the use or inability to use software. And all the clauses in between, which you can see on this table, just introduce some kind of limitation, aggregation, to limit the total exposure of the underwriters. On the slide, you can see that there are some clauses which are specific to war risk, to basically cyber attack or cyber warfare, because we are more and more seeing these days cyber warfare activities. These are the ones shown in red, and all the others are general and could relate, some of them only can relate to both type of exposures. I won't go into the details of all these clauses, but if there is little time left, I will just explain to you the complexity of what has been attempted with respect to passenger liability to try to ensure that underwriters are protected somehow and can limit their exposure, but leaving operators still compliant with the minimum insurance requirements that are imposed upon them. Next slide, please. Next slide, please. So you've got, I will just comment in 2 minutes on this war risk clause, and you will have something very similar for the ordinary risk, but it will be slightly easier. Basically, it has to be understood that the clause, which is AVN138, which address this specific exposure of aircraft operator, is an amendment to AVN52E. You had a presentation on AVN52E in the first session. In AVN52E, there is a sublimit which is introduced per occurrence and in the aggregate for third-party liability, whilst the full policy limit has been maintained for passenger liability, baggage, cargo, and mail. What the AVN138 introduces is the possibility for underwriters to benefit from a limitation in their exposure, in that if the cause of this event, which is a war event or a terrorist attack or a malicious attack, because we are in war risk, if the causation is a software causation, then the specific sublimit per occurrence and in the aggregate is introduced. When you have an AVN52E, say, limit of $250 million, you can have whatever the underwriter wish and negotiate with the brokers, of course, say 50 million or so, or sublimit or whatever. But the problem is that for passenger, there is, for instance, if we take the example of the EU regulation, a minimum insurance requirement that operators should have insurance coverage for passenger liability of around approximately $350,000 per passenger. So it's not possible. It's not possible to introduce an aggregate. It would be illegal, and there would be a breach of the operator's duty under the insurance requirements, which is why there's been this kind of derogation introduced, that in case the software, the aggregate is exhausted, cover is nevertheless maintained to match the minimum insurance requirements that are being set in the various applicable legislation, for instance, in the EU insurance requirements. So basically, as you can see, it's kind of complex. Next slide, please. You have the same mechanism, slightly easier for ordinary risk, because it's not an endorsement to AVN52E, but basically it is also as complex. And now just to finish, because I think I am running out of time, just a few words about AVN2000, maybe next slide. AVN2000, just to perhaps for those of you who are not present on the market in 1999 and the year 2000, there was a big scare at the time, which is at the origin of this clause. There was a big scare that all the computers, in all sorts of computers, not just in aviation, would not be able to recognize the date change between midnight on the last day of 1999 and the first day of the year 2000. It was linked to the fact that in the computers, they didn't use the full digits. For instance, the year 1960, they didn't code the 19, and as a result, there was this very big scare. So there was total panic everywhere. And as a result, in aviation, but in most type of insurance, not just aviation, there was this data recognition exclusion clause, which was introduced in case, because there was a fear of an accumulation, which would be linked to the fact that with all these computers unable to recognize the change of date, there could be, of course, very large accumulation of exposure, and which would be unbearable. So this exclusion has been introduced. Why is it still there? Because it still has potentially an application in case there is a computer that is unable to recognize the change of year, date, time, etc. It's kind of unlikely these days, but still it is being used. And just that you know, maybe next slide, that there are write-backs that are systematically included in the policy wording. Next slide, please, which are the AVN 2001A and 2002A, respectively addressing the aircraft liability risk and the others, and the hull. Basically, it's a write-back, which is not total. For instance, there's no write-back in case of grounding of aircraft, and there is no write-back for loss of use of property which have not been damaged. So it's a survival of the past, but it still has a meaning, and it was for a very long time the only clause on the market that was addressing the cyber exposure. That's it for me.
Thank you very much, Sophie. And I think it might then be time for our next poll. So if Tony can pull that up on screen. Okay, so this is a poll that we're going to be, I think, testing everyone's memory from Gareth's presentation about half an hour ago. So Gareth, do you want to take this one and then we'll move on to Sophie's poll?
Yeah, so it's a bit of a claim scenario we put together, very basic. So an aircraft suffers an engine fire on takeoff. They have to dump fuel before returning. They make a safe emergency landing. At some later time, a claim is received from a nearby landowner who claims that his lake was polluted because some fuel had landed in it. And the question is this claim likely to be excluded by AVN46B? You place your votes. Tony, should we have a look at the result? Okay, that's interesting. We've got a bit of a split there. So the majority, I think, have answered the question correctly. There was a in-flight emergency when they had an engine failure on takeoff. That necessitated the dumping of the fuel and effectively necessitated the sudden and accidental pollution that resulted. So the pollution claim that results would not be excluded by 46B.
Thank you very much, Gareth. And I think the polls are going to come thick and fast now because we'll go to the next one. And I think, Sophie, I'll hand to you. And then, Yeda, perhaps we'll save your poll until after your presentation on sanctions. Sophie?
Okay, so the question is, do you think a claim caused by a Y2K bug, so the bug of the year 2000, would have been covered under an aviation policy in the absence of exclusion? At the time, it was AVN 2000, now it's AVN 2000A, bearing in mind that the issue was known many months and even years prior to January 1, 2000.
Excuse me, could you just duck it over the brown gate at the side?
I think Yeda may have had a delivery, which I can confirm is not related to this poll. So we'll hold off for a few more seconds, allow the final answers to come through. And then over to you, Sophie.
I can't see the answer.
Here we go.
That's interesting. So it's 62% think the claim would have been excluded. Is that how the question was turned, I think? No, would have been covered. So sorry, so the majority think it would have been covered and the minority that not. I don't have a firm answer to give to that, but I think it's an interesting question and one that was raised at the time. Really, it's the question of fortuity. Clearly, the issue, there was a fortuity question. The computers were unable to, and this was known years in advance, the computer were unable to recognize this change of date. Should there be coverage or not? There's been a debate because clearly the impossibility to recognize the change of date was known, but the consequences, in particular in the field of aviation, would that generate a claim under an aviation policy? Would that generate accidents? In that respect, there was some degree of fortuity. So you can read interesting articles today of scholars exchanging views on these questions, but it's a question that is of interest, I think. But no good answer or bad answer.
No, I think that's a very interesting point to raise. Thank you, Sophie. So I can see we've got a couple of questions which we'll come to at the very end, which means I can now hand over to Yeda with the hope that her delivery made it successfully and in one piece. I think we might need to just unmute. There we go.
Right. The delivery, I have no idea because I just asked him to chuck it over the gate. So so it should not, it shouldn't be a problem. Can I have the next slide, please? Right, this is quite a busy slide, and it's to do with sanctions clauses in aviation policies. And of course, sanctions clauses are a hot topic at the moment, but they have actually been a reasonably hot topic for quite some time. You'll see the date of the AVN111 is 2010, and that was when that clause was drafted and came into effect. The LMA clause is a little bit older, not by much, but a little bit older, and essentially it's a contractual agreement between the insured and the insurer of how an insurer will be positioned should there be a sanction that impacts the insurer or the insured on the policy. So if we look at AVN, let's look at LMA 3100 first, which is an exclusion. It's a pure exclusion. It's very similar to paragraph 1 of AVN 111, but it simply provides that the agreement between the insurer and the insured that the insurer will not be required to provide cover under the policy if a sanction or embargo prevents him from doing so. And it provides specifically for the embargoes and sanctions under United Nations resolutions, laws of EU, United Kingdom and United States of America. And it is customary for that clause to be amended to include the domicile state of the insured as well. But it's a pretty strong exclusion. That was uncomfortable for aviators who would, for aviation clients, who of course inadvertently could touch upon sanctions because they operate into different regions, and therefore sanctions could come into effect, and they could sort of be innocent in the in being caught by a sanction. So the AVN 111 was drafted to be a little bit more sympathetic to the insured, and essentially what we're saying is that let me just find the bits I want to talk about. That the insurers will not provide cover during the time that a sanction is in place. It makes the cover suspensory, in that if a sanction is in place, cover can't be provided or claims can't be paid. But if a sanction is lifted, then any claims arising after the time of the sanction being in place can be paid and can be covered. There is a difference between can be paid and can be covered. If we are simply not allowed to pay, then anything that was being discussed or was being adjusted before the sanctions came into place will be halted, and funds would have to be set aside until such time as sanctions are lifted and claims can be paid. If it's coverage, then, as I said earlier, the coverage is suspended until the sanctions are lifted. Paragraph 3 provides that if it is reasonable, if the sanction comes into place, it is reasonable for the insured and the insurer to agree to come off the risk, because Otherwise, the insured has insurers on his panel and they can't pay claims. That would be unfair, and therefore the option to issue cancellation is considered an equitable option, and the insured can likewise agree, can ask the insurer who's no longer able to deliver on the promise made when the policy was initially incepted to come off the risk. Paragraph 2 provides that we should that if it is possible to seek a license to pay a claim, then insurers will do their best to do so. But there's no guarantees provided in this provision. A point to remember is that that sanctions can apply differently to the panel of insurers on a risk. One insurer would be subject to certain sanctions, another insurer would be subject to different sanctions. We're seeing it, we will see it at the moment on an international placement. Some insurers would be subject to EU sanctions, some insurers would be subject to UK sanctions, some insurers might be subject to US sanctions, and it would impact the insurers differently. So the insured may find some claims would be payable and some claims would not, or some part of the claim would be payable and some parts of the claim would not be. And of course, what we have to remember on a reinsurance is that the AVN111 or attaching to an original policy, the reinsured, the original insurer on that reinsurance would be subject to sanctions and would act accordingly. The reinsurers reinsuring the reinsured, and that's the contract that they're on, may be subject to different sanctions, and therefore it is possible, it's conceivable that the reinsured does not have back-to-back cover and can't collect, may not be able to collect under his reinsurance, although he might be obliged to pay under the insurance. So it has to be remembered that the clauses impact insurers and reinsurers differently, depending on the circumstances and depending on what the sanctions are that are in place at any given time. I'm not sure I need to say anything further on that, to be honest.
Perhaps
No,
we could
I think that's it.
We could turn to the poll now.
We can turn to the poll, yes. And I think this is a very interesting question. In the absence of a sanctions clause like AVN111 or LMA 3100 within a policy, do you think that an insurer is still subject to sanction rules? And I'm very pleased with this response because, in fact, sanctions apply whether or not it's addressed in the contract. However, in the absence of a sanctions clause in the policy, we don't have a contractual agreement between the insured and and their insurers, and therefore it may create some discussion and or some maybe some litigation arising from the insurer's inability to respond to the promise under the policy.
Okay.
And that's it. Thank you.
No, thank you very much. Yeah, that was incredibly useful run through of 111 and 3100. So I think Gareth will now bring us home with 72 for a couple of minutes, and then we'll have a look at the questions that are in the chat. So approaching the last chance to place your questions in the Q&A function. Thank you, Gareth.
Thanks, Tom. And you'll be pleased to know it is quite a brief one, AVN72. Whilst you will see it on every policy, it's quite a simple clause. So this exclusion clause excludes rights that may be granted by virtue of this act, the Contracts, Rights of Third Parties Act. Now, you have to understand what that act does in the first place then. So this act gives powers to third parties in certain circumstances that they may be able to enforce the terms of a contract that make them a beneficiary of that contract, even though they weren't a party to the contract in the first place. Now, if you think in the context of an insurance policy, that could be a problem if you have a claim asserted by a third party to be a beneficiary of the policy when they have no right under the policy to be a beneficiary. So what this clause says is that notwithstanding that you may be granted rights by virtue of the act, those rights are excluded from this insurance policy. And that provides protection to the insurers that they won't inadvertently have to pay a beneficiary who's not a party to the contract. Of course, the beneficiaries under the contract are the insured, additional insureds, and loss payees potentially. And that is a very quick summary of what AVN72 is.
Thank you very much, Gareth. So I think that's perfectly in time to have a look at the questions we've got within the Q&A facility. So I think I'll put the first one to you, actually, Gareth, if that's okay. And the question is, we have a specific nuclear exclusion clause. Why do we not have a specific exclusion clause for chemical and biological risk? They come up under pollution clauses, but there isn't anything specific.
Yeah, thanks, Tom. I'm personally not aware as to whether there's been any debate as to whether a chemical and biological exclusion clause is necessary within the aviation market. My personal feeling is that we already have two clauses that potentially address this risk. The first we've talked about today, 46B, the pollution clause, which would cover the pollution element of chemical and biological risks. And the second clause, of course, is AVN48B. So if we're talking about hostile use of biological equipment, weapons, whatever it might be, then 48B would address those risks. So I think between the two clauses, we already have the risk covered. And I don't feel that there's a need that we would have a separate exclusion clause for chemical and biological risks.
Okay.
Can I add a bit to that, which is it is, as Gareth said, it is adequately addressed, I think, and also it is mentioned in the LSW 555 under the exclusions 555D and addressed there when it's used for terrorism purposes and the like. So there is an exclusion, a specific exclusion to some extent under the whole war, and it is the first party exposure that is of a particular concern, as I understand it. But I do think that there was a discussion about amending AV48B back in the early 2000s, maybe 3-5, something like that, and AV48B and the right back clauses were amended to a limited extent to address these points, but there's been no appetite to bring any of that change in. And I agree with Gareth that it is probably adequately addressed in the clauses that are already in the market.
Yes, I just would like to add that in the first part of the presentation, I mentioned this work which was done, I think, around 2006, about an AVN48C and I think D and the right back clauses, and they were centered on the weapons of massive destructions, including these biological and chemical potential weapons. But clearly, these clauses exist, but are not being used, and it may not be necessary. I tend to agree with you.
Thank you very much, Sophie, and Yeda as well, for the comments there. That's really useful, and it means we can turn to the second question, which I think is for you, Sophie, and I'll ask if you keep the response brief, if that's okay. If we have the new suite of cyber and software clauses, why is there a need to include AVN 2000 or 2001, 2002 in policies?
Well, I think it's a good question, but considering that at least currently the clause that is really widely in use is the affirmation clause, the affirmation software clause. This means that the risk of the non-recognizing the change of date, which had been excluded so far, would be affirmed if there was not this specific exclusion as part of the policy. So long as there is an affirmation of software coverage, which is widely used, and I think that there is still the need for this AVN, assuming that underwriters are still concerned about this risk, which I think is a good question for underwriters to ask themselves, and also bearing in mind that the right back of this AVN 2000A exclusion are limited, for instance, with respect to branding, and there are a number of restrictions in the right back, so that it's a good question, and I think it's a question for each underwriter to ask themselves whether they want to maintain this exclusion AVN 2000 today, and if they affirm coverage on software, whether they want to affirm it as well for this data recognition issue or not.
Yeah, thank you, Sophie. And just in the interest of time, because we are about to close, I would just like to put one question to you, Gareth, and then we'll deal with the next one at the next session. Can AVN72 be attached to reinsurance risks under original conditions? Just ask you to keep your answer as brief as possible.
Yeah, Tom. So in a case of a reinsurance, we've obviously got two contracts, the original contract and the reinsurance contract. So in my view, it would be prudent for it to attach under both sets of conditions, under original conditions and under the reinsurance conditions. The slight nuance there, obviously, is that we're talking about an English law act. So under the original policy, it may be completely not applicable anyway. But my advice would be to attach it under both the original conditions and the reinsurance conditions.
Excellent. Thank you very much, Gareth. So as I said, we will pick up the final question at the start of our next session. If you do have any additional questions, please do send them on to me or Deborah Finch, the IUA's events manager. My email address is tom.hughes@iua.co.uk. So I think the last thing for me to do is to say thank you very much for joining, particularly as it's a Friday afternoon. I think we actually beat the attendance number of session 1, and that was about 130. So that's fantastic. Thank you very much for joining. We will be circulating a link to the recording along with the presentation slides. And of course, we hope that you can join us for session 3. We've got scheduled in for the 3rd of May. And as I said, it's not too late to register. Just let me know, or Deborah Finch, as I mentioned, the IUA's events manager. And we hope to see as many of you as possible then. Thank you very much, Gareth, Yeda, and Sophie, for your time again. And we'll look forward to speaking next time. Good weekends to all. Thank you.
Thanks, Tom.